How upset should you be about 3% mortgage rates? I'm Metlis with Watson Realty with your Tuesday tip. Freddie Mac recently announced that their 30-year fixed mortgage rate was over 3%, 3.02% for the first time since last July. That dominated real estate headlines. Articles talked about the negative impact it may have on the housing market. However, we should realize two things. One, the bump in the rate should not have surprised anyone. Many had already projected that rates would rise slightly as we proceeded through the year. And two, Freddie Mac's comments about the rate increase were not alarming. The rise in mortgage rates over the next couple of months is likely to be more muted in comparison to the last few weeks, and we expect a strong spring sales season. A muted rise in rates will not sink the real estate market, and most experts agree that it will be a strong spring sales season. So what does this mean for you? Obviously, any buyer would rather mortgage rates not rise at all because that increases their monthly mortgage payment. However, let's put the 3.02% rate into perspective. In this graphic are the Freddie Mac annual mortgage rates for the last 5 years. Though 3.02% is not as great as the below 3% rates we saw over the previous 7 weeks, it's still very close to the all-time low of 2.66% in December 2020. And if we expand our look at mortgage rates to consider the last 50 years, we can see that today's rate is truly outstanding. Here are the rates over the last 5 decades. So being upset that you missed the best mortgage rate ever is understandable. Buying now still makes more sense than waiting, especially if rates continue to bump up this year. It's true that you may not get the same rate you would have 5 weeks ago. However, you will get a better rate than what was possible at almost any other point in history. That's today's Tuesday tip.